GM. My name is Peng. I'm the Marketing and Partnerships Lead at FXcast, and welcome to the third episode of FXcast. Today, we will be chatting about crypto markets and perpetual trading with three of the top perpetual dexes and protocols in the Cosmos ecosystem. We have Danny from MarginX, we have Cooper from Injective Labs and Helix, and last but not least, we have Jonathan from Levana Protocol. Welcome to FXcast, guys.
Hello,
Yeah.
guys. Hello.
Hey guys, thanks for having me.
Yeah,
Hi.
thanks. It's a pleasure.
Yeah. Thank you, guys.
Awesome. So to kick off, could you just quickly introduce yourself and your project? Levana, maybe you could start first, followed by Danny and Cooper.
Sure. Hi, I'm Jonathan. I lead communications at Levana. Levana is a well-funded perpetual swap on the Cosmos ecosystem. We're currently live on Injective and Osmosis and Say, and we've been around for about 4 months. We offer up to 100x leverage on siloed markets. So that means each market is independent and has no impact on APRs on other markets. And we have single-sided deposits. We've just passed about $500 million of trading volume, and we're excited to launch our next major wave, which is going to be commodities and Forex trading.
Awesome. Danny, could you go next?
Oh, right. Thank you, Peng. So this is Danny from MarginX. So MarginX is a perpetual derivative exchange. So we also build on Cosmos SDK, and then unlike Levana, so we are actually a Uniswap, similar to Uniswap model. So everyone can actually provide liquidity. Then you can just the provide liquidity, then the perpetual market will be generated automatically. So what is I would say our advantage, or the creative part is we actually improvise the AMM, or from spot to ALO, automated limit order book market maker, for perpetual. So basically we inbuilt a automated market maker for every perpetual markets. So users, they just come in, then provide liquidity just like Uniswap. Then you can have your own perpetual pairs or perpetual markets. And unlike other mainstream perpetual, so just like Uniswap, so you guys can do a coin base or coin margin perpetual as well. So you can trade Bitcoin with Purse, or with FX, or with Injective tokens, or with Levana tokens. So I mean, this is I think we are one of the kind in the market, and we offered a long tail assets, just like Uniswap, like I keep mentioning. So we have been in the space, I think, for 18 months, and then our V1 version, which is just like DYDX, has passed 500 million last month, I think. So yeah, that's all for MarginX. Thank you. Thank you, Peng. Thank you, everyone.
Thanks, Danny. Cooper, you're up.
Yeah, awesome stuff, Jonathan and Danny there. I'm Cooper. I work for the team at Injective Labs, and more broadly, Injective is a layer 1 blockchain optimized for finance-based applications with a central limit order book really built at its core. But for the context of today's kind of discussion, I'll be speaking more specifically to Helix, which is the proof of product really built by the Injective Labs team, and is the leading DApp within the Injective ecosystem currently. So the Helix, which is effectively a front end, which represents liquidity that is shared across the central limit order book, has processed over $14 billion in trading volume to date. And has kind of launched a plethora of new and dynamic and really compelling products, such as pre-listed expiry futures, which just were live with both Celestia and Pith for one of the first times, in addition to several new features such as liquidity farming, and much, much more. So we work with strategic liquidity providers, meaning market makers in many senses, to come on chain and provide liquidity for users to open up not just perpetual swaps, but also spot markets, in addition to binary options and several other unique derivatives to come. So that's a little bit about me and what we're doing. I'm excited to get into this today.
Awesome. And for my next question, all of you guys have already touched a little bit upon it, but I will ask anyway, which is, can you talk about one distinct advantage that which differentiates your protocol from the other decentralized perpetual trading platforms? Levana, you can go first.
Sure. So all of our positions are fully collateralized. We don't need an insurance pool or a risk fund. There's no risk of insolvency on the platform because every position has essentially like a mini fund that's keeping it fully collateralized independently. And what that does is it allows us to be able to open up new markets with very high leverage that can be extremely volatile markets, like meme coins or other small cap tokens, that doesn't have any impact or negative risks to existing LPs. And the counterside to that, that all of our LP buckets are independent, is that when you come to the Levana Earn section, you can actually pick exactly which markets that you want to provide liquidity to. It's really simple. It's all single asset. You don't need to participate in a pool, and you can get real yield. We're paying out up to, I'll actually just pull up the numbers so I can give you some real-time quotes here. But we are, if I look here at the earn section at trade.levana.finance, I can see on the DYDX pool is paying out over 300% real yield APR. The dot market is 30, Luna is 12, BNB is 200%. The Rune is paying over 400% APR. Link is 64%. Celestia is 67%. So these are very high APRs, which are real yield. They're just pass through of the trading fees from that particular market, the particular LP. So it's a very unique model for these siloed markets, and it happens because of our peer-to-pool, capital efficient, segregated markets, which are completely fully collateralized.
Thank you, Jonathan. Danny?
Right. I think I will, or rather the MarginX, the unique point I think is the our ALO, our automated limit order book market maker. So users just just like Uniswap. So we actually envision ourselves become like the Uniswap or Perpetual. So any pair like anyone just provide liquidity, and then you can provide not only stable coins as the utility, you can provide your coins. So for example, you can put in Ethereum, so then you can have a pair of Bitcoin / Ethereum. So every pair on that particular market, you need Ethereum as the currencies to play with it. So I mean, this is in central exchange it's called a coin margin. But I think in perpetual markets, or rather in DEXs, it's still quite new. So yeah, so we envision ourselves will be the playground of meme coins. So when you see there's some coins on Uniswap trading very well, then you can actually take over the so-called the tokens over there. Then you can just generate your own perpetual markets on MarginX. So I think this is one of the very interesting stuff. So we envision this will be a fully permissionless listing. You don't need to pay us listing fee, just provide liquidity. Then you are on your own, right? So you can trade wherever you want. And then I think the second part I think would be quite interesting, will be the price oracle. So in MarginX, we not only taking tokens. Tokens means, by tokens I mean stable coins, or the other meme coins or whatever altcoins. So the other part I think is we actually accept LP tokens. So users, so for example, you provide liquidity on Uniswap, right? So you can take your LP tokens and collateral in MarginX, then you can use that the collateral assets to trade against or trade on MarginX. I think that one is something is quite unique. So we call that a supercharging idle assets on that. And I mean the third point I think is quite interesting is um we all know perpetual markets needs a price oracle, but for those meme coin or rather new tokens, right, like Chainlink or whatever like protocols, they don't provide this. So we actually invented this price oracle model by only taking the LP tokens. So we can like reverse engineer the LP tokens farm, then we can read the price. So that's why in MarginX you can list whatever you want, like literally just provide liquidity, then give us the LP token, then done. So I think these are the three things that is really make us different amongst the markets. Yeah, that's all from me. Thank you, Peng.
Thank you, Danny. Cooper?
Yeah, that's really cool stuff, Danny. And in kind of response, I would say in the context of this today's discussion, and it sounds like we kind of all share it to some extent, is that Helix and the Injective Order Book's current logic utilizes single isolated insurance funds, which largely to date have been somewhat capital inefficient from my perspective. But in over the past week, it has proven to be a much safer approach to kind of that specific subject and target. But kind of I would say where Helix, a couple of the different areas that Helix really serves, and the goal of Helix is to really be a kind of universal product offering to anybody entering the Injective ecosystem and getting to take a look. I would say that one, the access to incredibly deep liquidity on kind of strategic markets. So, for example, our Bitcoin perp or ETH perp on average has over $2 million in open resting orders. So a user can come in and open, several, 300,000 to $1 million position with close to no slippage. I'd like to, think that is a huge benefit. And in addition, I would say the amount of unique liquidity profiles on the platform. And what do I mean by that? One, we have these sophisticated market makers who are plugged in via API, but we're now rolling out different forms of effectively liquidity profiles. So there is a new feature where users can trade on with grid trading bots, and we have several different protocols that are deploying different forms of kind of market making vaults on chain, and we plan to see those really exponentially grow. So while we have the more sophisticated liquidity providers live and active on Helix, we also plan to see several more composable types of applications building on top of the stack, and making the Helix experience better. And that's what I think is really exciting, from the user's perspective.
Awesome. Yeah, thank you all for sharing. I can see that each one of the DEXs here have their own distinct advantage and even some overlapping strengths as well. So moving on to the fun part, um, I think we've seen Bitcoin starting from early September till now. It has been climbing from 25, like mid 25K, and now it's resting somewhere around 37K. So my question to everyone is, has the bull market started? Levana, you can go. You want to go first?
Oh man, I've been burned by this so many times in the past. It's very hard to say, when there needs to be some type of fundamental change, and the fundamental change could be a regulatory one, it could be a macroeconomic one, it could be just seller exhaustion that everybody that was going to sell, sold already. But it's never a straight line. When prices recover, I remember the run from, like, let's say $900 to 4,000, and then the retrace to like 23, 2,500, and then the kind of take off from there is that really led us up to like 19, and then back down to, I guess, 3.5. So those were some wild times, and I think that we're going to, anytime that the market tends to try and cause the maximum amount of pain to the maximum amount of traders. And so anytime that you get overly ambitious, or the greed factor shifts too quickly, then that ends up being the time that people get wrecked. So I think the bull market really only starts in hindsight. It starts, when like you're when you're, I think the quote from Reminiscence of a Stock Operator, which is a phenomenal book that everybody here should go and read, and Audible has a great audiobook version of it as well. But the quote there was about the shoe shine boy. When the shoe shine boy is telling you about how much money that he made from his hot tips, that's when the bull market, that's when we know that we're in a bull market. And we're probably more than halfway through the bull market. I think it's hard to tell with any level of certainty the first half of the bull market, just because it's usually coupled with so much volatility and so much retracement and pain that you got to just proceed with caution, and you got to make a few I mean, I know my personal strategy is like a few high conviction bets with a long-term time preference, and then couple that with a portfolio of a small percentage that just gets actively traded with the expectation that it's going to go to zero.
Very well put. How about you, Danny?
I sort of like agree with Jonathan actually. So yeah, I mean, my experience, I'm not like a technical guy, so I don't really look at the chart. So my experience is, if it's bull market, I think like my secondary school friend or my primary school friend, they will come and talk to me like, Danny, have you heard about Bitcoin? So I think when that happens, is really about bull market, right? That's what I thought. And I mean, sentimentally, I think right now the mainstream media, they sort of like go through the ETF thingy, and I think this morning was about the Binance news about I think the settlement with SEC. So I mean, I guess the media, or rather the mainstream community right now, is they're watching on crypto markets, but I think they're just watching. So no real money was coming in yet. So to answer your questions, I don't think the bull market has come and has arrived. I don't think so, but it just, like Jonathan mentioned, the fundamental hasn't changed anything much, I would say. Although the SEC keeps saying the ETF will be pending, doing whatever, and then there are some technical change. There are some good news like RWF, like LSD, all these things, but I don't think they are in full implementation yet. So yeah, so I guess when you cross the street, and you ride on the bus, and you overheard someone is discussing about how much I earn from Bitcoin, Ethereum, then I guess that might be the sign of bull market. Yeah. Thank you, everyone.
Cooper?
Yeah. I really tend to agree with both the answers. I think that it's nobody has a crystal ball. To speak to one of the specific kind of, are we in a bull market? And from my perspective, no, we are definitely not in a bull market. And that's, personally, fully just my take is that, just noted by Danny, I think all of the hype that we have seen over the past probably 3-month period has been specific to a Bitcoin spot approval from the securities and exchange commission. And I think that specific to that SEC ruling and determination, um, that there are several different institutions across various different levels, from the hedge fund category all the way down to and all the way up to several different aspects of traditional financial players who currently cannot access digital markets because they don't want to risk their traditional businesses that have been funded by LPs who didn't necessarily want access to digital assets and an exposure to those digital assets, but they are looking to get access and exposure pending successful kind of regulatory frameworks to be put in place. I believe that there is a massive amount of that, and that is kind of swinging the speculation that once we have a Bitcoin spot ETF, then an approval for Bitcoin spot kind of trading universally, we will then have the ability and access to all of these very large institutional players accessing the kind of asset class for the first time. And I think that that is really the hype train that everyone is currently riding on. And I think it's likely maybe a valid hype train to be riding from the sense that, when the generation that is coming up today is currently building wealth, over the next 40 years, maybe they'll think it's a normal type of thing to put 1% or 2% of their net worth into digital assets. And currently, the user experience, as we all know, is quite terrible to access different forms of DeFi protocols, etc. And a lot of the protocols that are currently being built, while we work every day at Helix, for instance, to uh, have every single different form of feature to onboard retail users and make it a seamless process, we do acknowledge to the extent that still crypto is so far behind the curve and DeFi is so far behind the curve in onboarding new forms of retail users. And I think that, having those different types of folks access these types of products, um, and this is kind of getting into a tangent, but is very important and also could kind of work with getting us to where we want to be in a bull market, say 12 months from now. But to answer the question, I think we're far from a bull market. We've seen awesome price action. I think we've seen a lot of awesome volatility come from the lows, from several months ago. And we realized that this is an asset class that really matters, that is here to stay. But it's really a question of how can we have more mainstream adoption, and unanimous alignment surrounding kind of regulation.
Great answer. And let's be optimistic and assume that 2024 we will see the bull market arrive. Assuming that happens, how do you foresee the bull market impacting the adoption of perpetual dexes, and how are each of you preparing for the bull market? I think just now Cooper mentioned the most important term, right? Mainstream adoption. So how are you guys preparing for mainstream adoption? Levana, you can go first.
Well, I think that
This space was downloaded via spacesdown.com. Visit to download your spaces today.
you have to define what mainstream adoption is. I don't think the mainstream adoption is going to look like what we have created in terms of the UI UX today, where it's this cumbersome onboarding experience, where you have to download a wallet, which is an extension to your browser. You have to write down these seed phrases. You have to constantly be diligent that you're signing the right transaction. I think the mainstream adoption only comes through a much more Web 2 like experience. And so some of the ways that we're preparing for that in the next cycle is to really focus on what parts of the core tech stack are being improved from the onboarding UX perspective, and then really doubling down on those. So things like fee abstraction, things like multi-party computational wallets or seedless wallets, things like being able to onboard more quickly from fiat and then off of fiat. Those I think are all really critical in order to be able to kind of break out of the boundaries of crypto bros that we've currently been catering to these past the 2 or 3 cycles.
Danny?
Yeah, I guess I have different view from with Jonathan. So So obviously, I mean, when the bull market comes, right, I mean, everyone is happy, right, because that will stipulate the trading volume. Everyone tends to, to trade more because they think, I mean, when bull market comes, you'll feel like you are just, whatever you buy, the price will just go up, right? So you just like, pick your number, the lottery will just help you to make more money. So obviously for perpetual DEX, especially exchange, we are more than happy to welcome the bull market's income, the incoming of bull market. So yeah, but the second thing is then as an exchange or as a DEXs or as a perpetual DEX, so what should we do to embrace the trend? So I mean, unlike others, so unlike Jonathan, so I'm feeling if because trading is very complicated, to be fair. So you just need to create so called the optics, saying that trading perpetuals or trading on DEXs can make more money and can make more yield, or can be better off, like they can earn more money. So I think the mass adoptions part, I have different understanding, is we need to implant or rather to teach them or educate the Web2 or Web3 traders. So because the traders, they are very smart. They will, if they know this thing can work and this thing can make money, so they will cross chain, they will do whatever swap, they will do whatever things just to go through like that. So I give you an example. So um when I was like pretty young, right? So I work as the one of the traders in one of the investment banks before. So imagine they are doing a high frequency trading. So they will somehow find a way to just increase a millisecond speed on it. So traders are very very smart. So what we need to do is to let them know your DEXs, or rather the mechanic works and can generate you real yield. And so sooner or later they will just come over. So learn from our last experience from Uniswap. So I don't know whether you guys realize, so Uniswap, although I think they are the first swap. Actually, they are not the first swap, but they the what would I say, the core contribution of Uniswap is that they let Web2 people like my friends from like from investment banks, they start to play on it, and GMX as well, and Levana as well. So people really thinks that this thing can work and I can make money. So what we need to do is not really, I'm saying, okay, opening a MetaMask or wallet is just too cumbersome. I mean, I don't think this is something we can sort of like lower the barrier, because is the balance between security and so-called conveniences. So I don't think for traders, especially for DEXs traders, I mean such a complicated products, they would rather to keep the securities aside as well. So for the mass adoption, what we need to do is, like, I mean, all of us, Levana, MarginX and Helix. So all we need to do is to educate the Web2 traders that thinking that the mechanics works, and please come to put your money on it. Then we can make the whole ecosystem stronger together. Yeah, thanks.
Very, very interesting perspective. How about you, Cooper?
Yeah, no, great notes there. And I'm going to dive back in terms of mainstream adoption, and I think it's kind of the biggest hurdle. And I definitely want to note that I think that from a lot of senses, we should highly decouple the kind of price of Bitcoin, let's say, to how many users are using things like MarginX, Levana, Helix, etc. Because I think that specifically the user experience, as Jonathan noted, is still lacking. And I imagine, from my perspective, I think that the only way that crypto and what blockchain has promised, and DeFi specifically has promised, will win is in the case that the user experience is that much better for the end user. And I think that the best products will always win. And these different types of DeFi products, as we all know, have huge advantages in many senses, and we're seeing a very geopolitical world in which a lot of these different things and different aspects of DeFi could be incredibly valuable as well. So I would say that things such as account abstraction, we're working super closely on trying to abstract all aspects of the user experience that crypto brings, such as Jonathan noted, wallet extensions to being able to sign up with, let's say, an email. We recently integrated Notify, so now with our Notify integration, a user can get a Telegram message or a text or an email, by enrolling and not giving away their identity in any sense, just, linking it to their wallet address. And they effectively can be updated in real time as to where their positions stand. So we're working around the clock to kind of, really make that user experience as strong as we can. And we think that that is kind of the most important aspect into onboarding, um, you know, as many new users from the mainstream world as possible.
Yeah, very well said. I think, to be honest, if you look at the perpetual DEX space, it's super overcrowded. I think every L1 and L2 has at least minimally 3 to 5 perp DEXs. And I think that the result of this is that liquidity is spread very thin. So I'm just wondering for each of you here, do you think the space is becoming overcrowded, and how do you attract users in such a competitive space? Levana?
Well, number one, I think it's about, I think there is room for there to be more than one player per ecosystem. I see each ecosystem is almost like a little sovereign country. Obviously, people can move from one country to the next, but many people, their bank account, let's just say their wallet is in one place, and they'll have the majority of their economic activity in that place. For that's at least how it's been in previous cycles. So I think until we have new participants, we're probably going to see similar, outcomes. And what so that means that while there is fragmented liquidity on each blockchain, the upside is that the competitive nature of each instance of a perpetual swap can allow for the platform that provides the best user experience, provides the best safety, provides the most capital efficiency, the lowest fees. They'll be the ones that just the market just trends towards. I think also just having a strong marketing team and having a high meme IQ helps a lot. A strong ambassador program. I think that's one of the things that really has been very successful with Helix and Injective in general. It's one of the things that I know has inspired Levana to join that ecosystem, is just to see how impressive the marketing wing is, in addition to just the core technology. And will we see kind of a consolidation in the next cycle? I think that probably the bottom half of the barrel will get wiped out, but I think that the top half of the barrel will survive, just simply because more market participants will be coming in. Leverage trading is an incredibly lucrative protocol compared to other things like spot trading and lending platforms. And so we'll see that as the market grows, those that are in the top half will maintain relevance. And that's my prediction.
Thank you. Danny?
Right. Yeah, I sort of like agree with Jonathan as well. So yeah, I mean the like each ecosystems will at least have more room for 2 to 3 perps, or yeah, because the the trading volume of perps average has 5 or 6 times of if you compare with spot. So yeah, right now, I mean, if you see there are like 4 or 5 spots on like Uniswaps or wherever on Ethereum, so you can have like another 2 or 3 or even 4 perp decks on each ecosystem. That's what I envision as well. So back to the questions, what can we, or as MarginX as a new DEX, so what can we do to attract users? So I mean, I always believe we need to create the real value. So and then I think like Levana or Helix, you guys provide a very comprehensive insurance system. So like each pool is so called isolated, and even Levana has this very interesting so-called pool. So you users just they like 100% guarantee, so you will get whatever you earn or whatever you put in. So it's very interesting. So on MarginX we tend to on top of the insurance pool, so you can win wherever the pool has, so there's like no issues at all. And but what really put us on or really give users more utility is I think it's the LP token and then the coin margin perpetual market. So users, I mean traders or whatever, so if you see there's very interesting tokens that you are holding and then you want to earn more yield, so you can just put in your LP tokens or even the tokens from that projects. Then like let's say Injective, so you can put Injective tokens on it, then you can generate whatever market. So for example Bitcoin slash Injective, then users with the Injective holders can come in and trade against Bitcoin. So that would be I think the features that I think would be interesting, because every ecosystem or every so-called project has their own tokens. Then sometimes users just don't know what they need to do on it instead of staking. So we provide the solutions, or rather we provide the options to let users to come in, and then they don't need to swap into stable coins. They just can come in. And for traders as well, so if they spot out there are like pretty interesting opportunities, they can create their own tokens and be the what we call be the liquidity provider or the house dealer. And like I mean, yeah, there's actually one thing I forgot to mention. So we tend to be like a Uniswap for perpetuals, but for the mechanic wise, we actually tend to lean against like GMX model. So we will the mechanic will lean against the liquidity provider. So if you want to earn yield, I mean that could be one of the options for users as well. Especially you can put in your LP tokens or even the tokens. So yeah, I mean by creating real value, giving the token holders or our users more option is, I think it's our way to attract users to come to MarginX. Yeah, thank you very much.
Great point. Thanks, Danny. Cooper?
Yeah, that's really cool, Danny. And I think that there's a ton of potential products market fit and kind of bring in long tail assets specific to perpetuals. I think that there's a huge kind of segment surrounding, long tail assets that a lot of these different perp dexes have the opportunity to really find a great fit in. And from our perspective, I would say that kind of, to answer the question, what do we think is like the thing that will kind of, move away a lot of the, so-called perpetual exchanges that have been funded and will be launching in the coming months, is that we think that at the end of the day, liquidity begets users, and liquidity begets all these different types of kind of trading profiles as well as liquidity profiles onto the prospective exchange. And from our perspective, we believe specifically that if you can outlast everyone, and essentially be the main hub of liquidity, then the users will come to you. In the sense, I mean that right now we're a central limit order book DEX, and our main goal is to go out to some of the largest market makers across crypto and traditional finance and have them integrate with our exchange module. And it's kind of chicken and egg problem in the sense that the liquidity providers want to be in the place where there's the most flow from retail, and they can capitalize on that. So, for example, there's been stories of very famous jump trading being the strategic liquidity provider on Robinhood, right? And on Robinhood, millions of retail users came on and bought their first crypto. And liquidity providers and market makers will make the best markets in the places where there's the most flow. And currently, we believe that that kind of economic model is a bit flawed. In you have these venture capital firms running around just writing checks into every perpetuals exchange across every ecosystem, and as we've all noted, they're in some sense a dime a dozen. And we think that to kind of really win market share across that, we believe that essentially ensuring that the liquidity providers and the dollars are there to onboard the users will in effect be kind of the leading instrument to propel our kind of central limit order book exchange module to the next level. I'd say that that's kind of the approach.
Gotcha. And Cooper, I want to stay on you and ask also about Injective. Why should a project that's looking to build a perpetual DEX build on Injective?
Yeah, totally. So this is a great question, and I think Levana is an incredible example, right? So first of all, to dial it back a little bit, Injective is a layer one blockchain, and at the center of that layer one blockchain, there's a central limit order book, similar to the New York Stock Exchange or Binance, et cetera, right? But while being a layer one blockchain, we have all different types of applications that kind of serve specifically different functions within the ecosystem. And an incredible example is Levana. Levana, I would say, is probably the leading DEX on Injective in terms of accessing different forms of markets and getting access to super high leverage, etc. And another perfect example is, like, let's say Talus. Talus is an NFT marketplace, which came over from Terra, which has found incredible product market fit and has made over hundreds of thousands of dollars in trading revenue already, and done huge volumes. So why would you build on top of Injective? And this is kind of the more grandiose vision, is that we have this exchange module, which in effect allows for anyone who would want to go build a DEX on Arbitrum or on any other chain to come over, through governance, launch any market they would like, from real world assets and kind of, hint, hint, we have some exciting stuff coming there in the coming weeks. So definitely stay tuned to a lot of our different Twitters, all the way to, for instance, lost my train of thought there, but essentially the point is that a DEX and a builder could launch markets through governance, connect with our liquidity providers who are already integrated, have them provide liquidity, and then the only thing that they have to do is provide a compelling user experience on the front end, and create a front end that really makes sense. And from this perspective, you don't have to spend 8 months building out the logic of an exchange. Every aspect of a central limit order book exchange is already there and built for you. And that's really the compelling aspect of having different forms of users come on and build an exchange. So a quick kind of 30-second example of that is there's a team called Trueflation. Their price feeds are currently live on Injective, and they're currently live on 5 or 6 other chains, empowering different forms of DEXs. But they've always wanted to build their own DEX, but didn't have kind of the development resources in-house to do so. So they were able to spin up their own front end, probably in just under like a weekish, launch new markets through governance, and very soon Trueflation will have its own DEX for the first time, as opposed to just having price feeds. So that's kind of the compelling aspect to what Injective is doing, but also at the same time, we have this much larger overarching kind of ecosystem, that we're really much more excited to support from that sense, and really have as many different applications work to find product market fit and support those things as well.
Awesome. Levana, do you have anything to add to what Cooper just said?
Yeah, I think ultimately the ability to to have multiple platforms that enhance each other from a liquidity and fee perspective, as opposed to compete with each other, they will attract the most projects. Because at the end of the day, I mean, let's say there's so much that's just front end user world to the success of a protocol. Does Binance, or imagine that that Binance, Gate.io, MEXC, any of these exchanges. Imagine that you could just launch a new exchange and then instantly have all the liquidity of Binance on that. And then instead of having to fight the uphill battle to get market makers and to essentially create incentives, let's just call it bribe, to not literally bribe, but you know what I mean, to get all of this motivation to move so much redundant capital over to yet another exchange. It's like that can be 90% of a young exchange's work. And so the place where you kind of have like the sink, the black hole where just liquidity is sucked into, and then now other people can create user experiences on top of that liquidity. That's going to be a very compelling ecosystem to build in.
Awesome. And for Danny, I know that MarginX is built on FunctionX, which is a EVM compatible layer 1 built with the Cosmos SDK. Can you share why FunctionX is the best place for MarginX to build on top of?
Yeah, sure. Would love to. So for the structure wise, I think Levana and Injective keep mentioning about the isolated pool, the insurance pool. So actually what we call a MarginX also has this is isolated pool, and in fact MarginX actually go further a bit. So on MarginX, every chain every trading pair is a chain itself. So the Bitcoin pair and the Ethereum pair, they are not running on the same chain. So the liquidity on BTC chain and then Ethereum chain, they are shared. So users don't need to worry about when they input the funds, so which pair they should be trade. In MarginX we actually solve that issue. So I mean, so in a more how to say it, in a more how should I put it, in a structure or in a technical perspective way, is MarginX actually is a L1 itself, just like a bit like Injective, and then the trading pair Bitcoin, meme, Doge, whatever tokens they are, like the L2 on MarginX. So wherever you guys need to do the final settlements, everything, then it will runs on MarginX. But wherever you input the orders, open positions, close positions, everything will actually happens on the side chain, or rather the trading pair chain itself. So why we build on that is because um FunctionX has this ability to do that. So they and then every this we the order books is more like a like highway. So FunctionX provide these facilities for us to build whatever trading pair and isolated pair, and then it's all automated. So wherever we want to build in something like create a chain, so they just plug in the oracle, then go on the nodes and give a like 5 or 10 minutes wait, then we can generate a new chain, a new pair on it. So this is, I think, the technical, or rather the architecture wise, this is the advantage. And then secondly is, of course, MarginX tend to be like the fully decentralized. So every orders, like if you want to cancel orders, you want to make orders, even the market order, open positions, close position, everything will be on chain. So that will require a lot of customizations, especially on the blockchain explorer. So if you go to StarScan, which is the blockchain explorer of at FunctionX, you will see there are a lot of message like open positions, close position, liquidations, and even take out orders and then put in orders. This kind of messaging will be like all custom made. So yeah, I mean, FunctionX team actually has been very dedicated to help us to provide all these infrastructures for MarginX to really do the business. So yeah, and then thirdly, of course, is the community. So FunctionX has I would say, a pretty decent community, and they provide us a lot of supports and monetarily and spiritually as well. So yeah, these are I think the main three reasons why we build on FunctionX.
All right, thank you, Danny. And with that, I'd like to conclude today's Twitter Space. I want to thank once again Jonathan from Levana Protocol, Danny from MarginX, Cooper from Injective Labs, and Helix for your time. So if the bull market does arrive in 2024, I'm sure we're all going to make it. Thank you.